Hello, I'm Megan. I love investing in real estate and empowering others to do the same. And today I'm feeling a little bit nostalgic, so I decided to tell you all about my very first real estate deal. I'll walk through my timeline leading up to my first deal, what the property was and what the numbers were, the few things that I did that really helped me get into that first rental property, and how it's doing now. So let's dive in and start with the timeline leading up to my very first rental property. Like many, after high school, I went to college, and then I actually decided to join the Marine Corps after college. And while I was in the Marine Corps, I read the book Rich Dad, Poor Dad, like many people who end up getting into real estate. I was on deployment in Afghanistan, and the book planted the seed in my brain that I wanted to invest in real estate as a way to get out of my 9-to-5 earlier than most in life. But I was deployed, I didn't feel like I could do much from over there, and so I just kind of put it in my back pocket. And when I came home, I didn't do anything with it then either. I ended up getting out of the Marine Corps, using my GI Bill benefits to go back to school and get my MBA. And that led to a high-paying corporate job. And that kind of took my mind off of real estate for a little while. Yes, I was excited about real estate still, but I had this great high-paying job, and I was kind of getting comfortable in that rat race for a little bit. In 2012, while I was in grad school, I did buy my first primary residence. So this was my first real estate purchase, but I still wasn't doing anything in terms of investments in real estate. It was actually in 2015 when I bought my second home to live in, because I was doing that whole lifestyle creep while working the corporate 9-to-5. I moved into my second home, and I did keep my first as a rental to kind of dip my toe in the water of being a landlord and just see what I thought of it. But I still don't consider this my first true rental property. It was just me keeping that other home for a little bit, and I really only kept it for 2 years before I ended up selling it. But in 2016, everything changed. I had my first child, and this was what reignited that fire that I wanted to get out of the corporate 9-to-5. I had my daughter in March of 2016, and I had a pretty generous maternity leave, as most maternity leaves go in the US. So I didn't go back to work until August. But already by the time I was getting back into the office in August, I knew that I wasn't gonna wanna do this forever, that I was gonna want more time at home with my child, more flexibility for raising my kids, more flexibility for my own life and interests and passions in general. So by November, December of that year of 2016, I was really actively looking at how do I get out of my job as fast as possible. And real estate, of course, came up pretty quickly. I started following different podcasts and listening to those on my way to and from work. I started reading books. And finally, by July of 2017, I bought my first rental property, my first property that I purchased solely with the intention of holding it as a rental. It was a 4-family in South St. Louis City. So you can see that it took me several years to get from that idea of real estate investing first being planted to actually taking the steps to becoming a real estate investor. But I got there, and that's what counts. So I hope that you keep that in mind in your journey. No matter how long you've been thinking about it, you can still get there, you can still do it. Just go out there and take action. So what happened after that? Well, in 2018, I bought 2 more duplexes. In 2019, I bought another duplex, and I left my 9-to-5 job. I had 10 units now. I had done some flips and wholesales along the way, and I felt confident that I did not need that traditional 9-to-5 anymore to chart the course that I wanted to follow in my life. And from 2020 on, I continued that more real estate investor / entrepreneurial journey. I was buying more real estate, doing flips and wholesales, and I actually started a business as well, which I ran for a few years before selling. So it took me a little while, but I got there. I got out of the rat race. And today we're going to focus on that very first investment in 2017 that catapulted me to eventually leave my full-time job and live a life with a lot more flexibility and freedom. So this 4-plex in South St. Louis City. I bought this property in 2017, and prices were still pretty good back then. So I bought a 4-family for $139,000. This is in a more transitional neighborhood in St. Louis, but it's still solid. So it wasn't like I was buying it in a D area, and it was in pretty good shape with tenants already in 3 of the 4 units. I knew it would need some repairs and maintenance and maybe some little cosmetic touches as tenants turned over. So I estimated about $10,000 needed in rehab. So all in, $149,000 for this 4-family in South St. Louis City. My down payment was $34,750. I had a 30-year fixed conventional loan. It was 25% down, and that was at 5% interest rate at that time. When I bought it, I knew that as soon as I placed a 4th tenant, my monthly income would be about $2,235 per month, and I anticipated expenses to run around $1,600 to $1,700 per month. So this left me with a cash flow of $539 per month, which, if you do the math on the money that I had invested in the property, including the repairs that I expected to pay for, that's about a 14% cash on cash return, which is really not too shabby. So how did I get there and finally pull the trigger on that first rental property investment? There were 4 things that I did that I think really helped me finally pull the trigger. First of all, books and podcasts. I educated myself. I was listening to podcasts on the way to and from my corporate job every single day religiously for about a year. I didn't hear music in my car for a solid year. And I was also reading a lot of books. My favorite books are the ones from Bigger Pockets, although there are a ton of great books on investing out there. I also networked like crazy. Networking through Bigger Pockets online, as well as going to in-person events in the St. Louis area, really helps me out. I found the agent who was able to help me find a rental property. He was a very investor-focused agent, and that was super helpful in my journey. I also found other people who were investing in real estate and could help me kind of verify the numbers that I was looking at in terms of income and expenses on these properties that I was running numbers on. I even found the person who was kind of in charge of the local neighborhood association in the area where I ended up buying this 4-family. And I found him on LinkedIn. He was really nice. I invited him to coffee, and he really gave me a lot of information about the area and what was happening in the area, the growth that was expected in that area. And that helped me feel more confident to invest in this area that was really kind of an up and coming neighborhood in the St. Louis area and was not fully developed yet. As I was getting to know the area, I actually also went on date nights and dinners in that neighborhood. I found local restaurants and a little brewery, and those were the places that I went and spent free time just so I could get the feel for the neighborhood. The third thing I did a lot of was running numbers. I use online calculators as well as a spreadsheet that I built over time, and I just ran the numbers on tons of properties. And then when I found this property in particular, I really ran the numbers a lot of different ways because I was new and I didn't know exactly how it would turn out. So I ran everything from worst case scenarios to best case scenarios and everything in between to try to help me understand what I thought was the most likely scenario in terms of income, expenses, and cash flow on this property. Finally, the 4th thing I did was just ignore the fear and do it anyway. I don't think there's ever any point when you just stop being a little nervous about buying a property, especially your very first one. You just have to remember why you're doing it and jump in and know that at the end of the day, even if it doesn't go quite as well as you hoped, it probably is not going to ruin you. One of my favorite quotes to remember when I'm getting concerned or nervous about something is, "Ships are safe in harbor, but that's not what ships were built for." I always remember that and remember why I'm here and what I'm trying to do with my life when I find myself feeling a little nervous about the next steps, because I know that growth and great experiences are always on the other side of that discomfort. So how is this property doing for me now? I'm happy to report that this first rental property that I ever purchased ended up being a very happy story. So in 2017, I purchased it for $139,000. Last year in 2024, I got an appraisal and it is now worth $320,000. So that is a 130% increase on the value of that property. So taking a little bit of a gamble in this area that was up and coming, but doing my research, it was a calculated risk that I took. It's really paid off for me in terms of property value growth. The monthly income and expenses have both gone up, but the most exciting part is that the monthly income has gone up more than the monthly expenses. There's 2 reasons for this. First of all, the rents have gone up faster than the expenses because this area has been improving and I've been improving the property along the way. But second, the expenses did not go up as high as they might have because I did end up taking over management of my properties in 2019 when I left my 9-to-5. So I personally am a big fan of self-managing if you have the right people and processes and systems in place. I actually have a whole method I like to talk about called the prop method. If you're interested in hearing about that, comment below. I've been thinking about making a video on how I self-manage 24 units with ease. I really only spend a couple hours per week on managing those properties, and I'd be happy to share that with you. My cash flow has therefore gone up 110% since I first bought it. And the really cool part is that my cash on cash return, which was already really solid at 14%, is now infinite because with the property value growth over time, I was able to refinance this property in 2020 when rates were really low, take out all of my initial investment, still end up with a PITI payment, principal, interest, taxes, and insurance, that was about the same as my initial one because rates had dropped. And now my returns on this property are infinite. All my money is back out of it, and I'm making really solid cash flow of a little over $1,000 per month every single month on this property that I bought in 2017. So that's my story. That was my timeline getting into real estate. My very first property, the 4 things that I did to finally get into the real estate investing game, and how it's performing for me now. Not every property ends up going this well, and I've certainly had a couple duds along the way, but I hope that this story was informative and helpful. As always, if you have questions, please comment below. And if you found this helpful, I would love for you to subscribe and watch some of the other videos. Keep learning, keep growing, and have fun.